So now for the next block, we have a lineup of 3 speeches in a row. It's 3 firms presenting a business model they have, and they wouldn't be around, like 10, 15 years ago, they wouldn't have been around with that model. So they're clearly children of the digital age, and I'm really pleased that they can present here. They all have the potential to challenge banks and asset management. So these are, just if you needed to imagine disruptors, look at them closely. That's how they look like. So the first up is loan books. That's probably one of the most famous among the startups. Presenting will be Stefan Mühlemann. He's the founder and the CEO of Loanbooks, and that's an independent capital platform, a capital market platform for the public sector borrowers and institutional investors. 12 billion francs have been borrowed through the platform already, and now there will be an evolution, and Stefan will exclusively lift the veil on this one. Thanks very much.
Thank you very much, Cliff. That helps my overinflated ego, what you just said. So thank you very much. Yeah, Loanbooks. I spent many years in debt financing before I started that company, and I'm a serial entrepreneur. I started several companies. So before I actually founded Loanbooks, I went out to the market and I asked public sector borrowers and institutional investors, how happy are you with raising and investing in public sector debt? And this is what the market said. The market said it's not at all transparent. It's actually quite tedious to raise and invest in public sector debt. It's not secure. It's absolutely not innovative. And it's pretty expensive. So with that feedback, it was clear to me, there is probably a business opportunity out there. And the thing I did was, I talked to some of my smartest friends and said, hey guys, do you want to found a company with me? So I was able to convince one guy to be the CTO, one guy the COO, and I took the CEO hat, and the 4th guy now manages another company that I started a few years ago. In the meantime, after 3 years, we've grown to a company of 40 employees, and one thing that I'm pretty proud of is that we are actually the #1 financial service employer in Switzerland, according to Kununu. That makes me very happy. Now, what does Loanbooks really do? You have to imagine you work at the municipality and you want to build a new school. You need 30 million and you want to finance those 30 million, let's say for 15, 20 or 25 years. So in the past, you made a deck, you talked to banks and to other investors, and you met with them, and they came over, and you sent emails back and forth, and you had phone calls, and there was a lot of interaction going on. At some point, you got an indicative offer from one lender, and maybe a week later from another lender, but interest rates had moved in the meantime, so it was hard to compare. And then you got these loan contracts, and they were like 40 pages or 50 pages, and you don't really understand all the covenants and all these details. So all in all, it may have taken weeks, if not even months in the end, to get to that financing. And now with Loanbooks, that has changed a little bit, because it takes today about 1 minute to have such a transaction done. Our clients say that it is extremely easy to use Loanbooks. We reduce cost by about 90%. That's not the interest rate on the loan, but that's the cost to actually facilitate the loan. Super transparent for both sides, lenders and borrowers, and it is very, very secure. So what happened since we went live at the end of 2016? This is the traction. We are just about to pass the 13 billion mark. In terms of population, we're almost at 60% market in Switzerland. We started in Germany at the end of last year. We're just about to go live in Austria and in France. And also in terms of users, you can see we have over 1,500 users today, about 800 borrowing organizations, and about 300 lenders. So I don't want to go into too much detail here, but we won the Swiss FinTech Award this year. Last year, we won the Eurofinance Innovation Award, so that's super. But one thing that is really important for me is the customer feedback, obviously, here. And you can see that with a net promoter score 90 out of 100, I think we're on a global scale about number 5, and that makes us very happy. Here's a snapshot from the Swiss FinTech Award, which was quite nice. We didn't only get the trophy, we also got these slippers here, these unicorn slippers. I have 2 girls at home, 5 and 8 years of age, and they love them. They walk around in them every day. Now, we got some nice coverage on the press, but one thing I want to just show you so you can compare the volumes a little bit. This shows how much crowdfunding has been done in Switzerland in 2016 and 2017. And now if we put the volume of loan books next to it, we actually have to significantly decrease the scale of that chart. And that just shows you how if you work in public sector, very, very high credit worthiness, big tickets, there is a lot of volume on the market that can be dealt with. What's next? We're going to expand into other markets. We're going to grow within Europe. By 2021, we want to have Europe covered entirely. Obviously, we're also thinking about the US and Asia, but at this point in time, we're looking at Europe mostly. Then, so far, we've only worked with loans, which is probably why you asset managers in here haven't really done a lot of business with us. But stay tuned, I'm going to talk about something new we're bringing. We're adding new client segments. We get, besides the public sector, we get very good interest from large corporations, which will also be allowed on the platform. And we're also obviously continuing to develop our technology. So now you're probably saying, okay, great, I'm an asset manager, loan contracts is not really something I can invest in for my clients, but if I had listed investments then and big tickets, this could be interesting. And one thing that we've always taken very seriously at Loan Books is what the customer wants. And so, okay, we developed something that you may like, which is bonds. And we announced that yesterday. It was unbelievable, the press coverage we got. I was very happy with that. I actually wanted to have James Bond here on the picture, but my marketing head said, we can't use it, it's protected. So we're bringing bonds, which means that a borrower, a municipality, a city, a canton, or a large corporation can do a self-issuance on loan books. And you as asset managers have a direct access into the book building. It's entirely transparent. You can see where offers are. You know your allocation from the beginning. There is no random allocation that you don't understand. It's all there. And I think you will really like that. We've developed it with about 20 to 30 issuers. And we've already spoken to about 50 investors, mostly the very large ones. And everybody is very happy about the fact that it's extremely simple. It makes the process entirely transparent for both sides. It's obviously much cheaper than today's process if you go through one of the large investment banks. And again, it's very secure. I have one screenshot I can show you. I'm not sure if you will be able to see it all the way in the back, but I can explain to you what's going on here. So on the left side, you can see the book, and that will be shown on an anonymous basis. You don't see who is actually making the subscription or the offer, but you can see where the book is. So if you put in a subscription, you pretty much know if you're going to get an allocation or not. You can also need to see the yield scenario, because you can put in, okay, I want to do 30 million for my clients, but only if the minimum volume of the issuance is, for example, 100 million. And at the same time, you want the minimum ticket of 5 million. And you don't want to have more than 28% of the entire issuance. So there's many different parameters you can set. You can also put in many orders. You can say, I'm going to do 10 million at this spread. I'm going to go do another 5 million if it's going to pay 2 basis points more. And that's going to be something that will be very easily and transparently displayed here, because we're using an algorithm and it's not people who are trying to manage that book. You can also do that for several investors, by the way. You don't have to do it only for one. We have 2 here. You can see there's one offer for 50 and another one for 40 million. And on the right side, you could see if the issuer takes 250 million, for example, this will be my allocation for this client, and this will be the tiny allocation for this client. So if that is of any interest to you, please come talk to us. Christian, can you stand up for a second? I have a colleague here. He's very happy to give you information as well. And we're very happy to all see you very soon on Loan Books. Thank you very much.
Thanks very much. I want to add that we don't have questions for this section, but the speakers will be around in the lunch break. So now the second Impulse Speak is by Ralf Huber, co-founder of Apiax. Now he's been in legal and compliance for 16 years at big banks, and he will show how important taxes are for the return of in-client portfolios. Now, most financial institutions are not taking taxes into account in a systematic fashion, but this is where Apiax comes in. So please, Ralf Huber.
Thank you very much for the kind introduction, Cliff, and good morning, ladies and gentlemen. As mentioned, my name is Ralf Huber. I'm co-founder of Apiax. Apiax is a RegTech startup based in Switzerland. And what I would like to do over the next couple of minutes is to discuss with you a long neglected topic, from our opinion, long neglected in the asset management, but also in the private banking industry. And this is tax regulation. And based on my personal experience as a legal and compliance professional in the asset management industry for many, many years, one thing that I've learned extremely fast is that regulation is not a topic that investment professionals like. It creates headaches. And while general regulation is one thing, tax regulation is super complex, so this is just pure nightmare. So what I would like to give you is a little bit of context and especially explain to you why we think that tax regulation and the focus on tax regulation right now is extremely important. Let me start with looking back in time. Just a few years back, when you were discussing with your clients' performance, and when I, as a compliance guy, was looking at marketing material, well, it was all about absolute return, right? Clients were happy with this, and at least in the private banking industry, we all know those clients, they had also other reasons why their assets were managed in Switzerland, so absolute return was okay by that time. That has changed a lot. While on the one hand, tax transparency is coming in, while on the other hand, new regulation is coming in, what we are looking at right now is cost-adjusted returns. So for your discretionary clients, for example, what you have to do under MiFID II is to provide them with a cost and charges report, which outlines in detail the returns, net of fees, and other expenses. If you look at investment funds, for example, with the PRIPS kit, what you have to do there is going into the details of performance scenarios and also there outline the cost impact. So this is reality. And while I think cost transparency is definitely a fair argument and it helps for clients and investors to compare providers, to compare financial instruments, I think the biggest untapped potential from our point of view is obviously with tax. And what we mean by tax is tax-adjusted return, focusing on tax-adjusted return, or what we talk about, in other words, is tax-efficient investing. So, I mean, all of you, you are all, or most of you are investment professionals, so you definitely know what this is all about. Also, Clifford has mentioned, I mean, tax is a topic since many, many years. What is missing is a structured approach, how you handle that and how you integrate tax rules into your daily life. And I think we all agree that taxation, depending on the client or the investor, can have a huge impact on investment performance. And many of you know some examples depending on where you do business. For example, in Switzerland, the obvious example always coming up is for a bond. So you don't have to be a tax-savvy portfolio manager to not go into redemption with a non-IUP bond, for example. That's an obvious one. But if we all agree that taxation can have a huge impact, why is it that there is no structured and comprehensive approach how we tackle the problem? We have a very clear answer to that, and the answer is complexity, right? Managing the tax impact or understanding the taxation impact across different jurisdictions on ISIN level and having all those information constantly up to date is a huge challenge, and it's obviously not something that the portfolio manager should care about, right? His job is not, and his expertise is not managing regulation. And this is exactly why we at APX came in here and why we established our tax product, meaning our tax rules. So what are we doing? This slide here shows you a basic overview of our value chain. We work together with premium content partners like PwC, like EY, like BDO. And what we do is we transform their existing expertise, tax expertise, into digital rules. Because what they have is people in all the countries, experts, they already have tax manuals, but what you guys today need to do is read through the manuals, understand it, and somehow apply that text to your actual portfolios. This is where we come in. That's step number one. Step number two is the APX platform. The APX platform is a tool for tax experts and for regulatory experts where they can look at our rules, they can understand the rules, a visual way of understanding taxation, and also they can change and apply the rules to a bank's specific framework, organization, risk appetite, etc. And all of this we do with the only goal of making integration of our tax rules as easy as possible. This is why we have an API. So we are not providing another front end, or we don't ask you, portfolio managers, to enter ISINs in a new tool, in our APX tool. But we integrate the tax rules into the tools that you use on a daily basis. And whether this is a portfolio management tool, whether this is a core banking application, whether this is a client advisory app, doesn't matter. It's an API, and we integrate it. Let's look at a few use cases, obvious use cases. Use case number one on the left side here is tax-efficient product structuring. So the obvious first step, before you establish a fund or any kind of other financial instrument, is to clarify what is the taxation impact for the target markets and the target investors. Step number two is the ongoing portfolio management. And if you think about servicing, let's say with discretionary mandates, servicing clients abroad, German clients, for example, already today, typically, you have some sort of a country-specific model portfolio. But what you have to apply, or what you should apply here, is really the concrete tax regulation for that model portfolio. And then, step number three, or use case number three, that's investment advice. Here also, an obvious use case where tax rules should be integrated. And let's look at this one a little bit more in detail. Providing investment advice by either private banks or also asset managers comes with a couple of different rule sets that are relevant. Because first of all, step number one, you have to clarify whether based on your license, who you are as a banker or as an asset manager, how can you talk, how can you approach clients, especially if they're not in Switzerland. Step number two, distribution rules. So the product-specific rules come in as soon as you want to mention concrete funds, concrete equities, bonds. Those rules, again, are country-specific. Step number three, client-specific suitability rules. Needs to be taken into account. And while going through these steps, you've just done basically what you need to do by law, right? You have a compliant client offering. You follow the rules. But that's nothing extraordinary. That's not the next step. The next step is looking into tax on a structured ISIN level and on a client basis. So where is your client domicile? And with this, we see potential for actually moving to the next level from a performance point of view. Before I've mentioned integration, and I think this is key for a provider like us. And maybe also quickly going back to what Cliff has mentioned, right? As a RegTech company and as APX especially, we're not really a competitor to banks and asset managers. What we try to do is we try to disrupt the value chain of how you create, manage, and use the rules. We don't want to disrupt your business. We are not the investment professionals, but we are the regulatory experts. So what we want to do is to deliver the rules you need in the form you need it in a way that you actually don't have to care about. And how that looks like, I would like to show you with the Temenos integration. What you see here is the Temenos order management tool, where our rules are pre-integrated. This is a combination now, you don't have to see all the details, I will explain it. What you see here is a combination of cross-border rules on the one hand and on taxation rules on the other hand. So as a client advisor, while entering my order, and you've seen on the top right side, there is an ISIN, there has been an ISIN entered. You enter a couple of client contextual details, so where did I meet the client, et cetera, et cetera. And based on that information, the tool is able to tell you with either red or with green, and with a reasoning, you will see that right now, whether from a cross-border and or from a tax perspective, this transaction does make sense for this specific client, for this very specific context. And pre-integrated, no new tool, just the tools you use anyway. So, summarizing, why do we think tax-efficient investing does make a lot of sense? Those are the benefits. Number one, create new touch points with clients and actually be comparable with the asset managers in a client's domicile, because if you look at the German asset manager, they understand German tax rules. Number two is investment performance, improve that. Number three is structuring a targeted investment product, including tax rules. And last but not least, gain a competitive advantage. Do things that others don't do yet. If you want to hear more about this, please visit our website. We have a white paper on tax-efficient investing. Also, we have a booth outside, so either during lunch break or thereafter or in the afternoon, please come and visit us and talk to us. We would be happy to discuss potential correlations. Thank you very much.
Thanks. Now for the third impulse speech, we have a little change in the presenter. It's going to be Silvan Fornaro and not Chris Gogol. Silvan Fornaro is head of sales of the all-in-tech fintech platform WealthArc, and he will give us a glimpse into the future of the wealth management industry.
Thank you, Cliff, and yeah, good morning, everyone. I know we are all very hungry, but please give me 10 more minutes of your time, and I'm very sure you won't regret it. So my name is Silvan Fornaro. I'm head of sales at WealthArc. Before I was working for Credit Suisse and Coutts in private banking. I actually joined just 1 month ago, and later on I joined Thomson Reuters as a sales specialist. And I actually wanted to join WealthArc because I want to be part of this new digital world, and also to help my former colleagues to use the latest technology in wealth management. So we are doing this by consolidating multiple portfolios from different custodian banks into one portfolio, and we're also using a state-of-the-art portfolio management and CRM tool. So our goal actually is to bring you away from this kind of stuff. So not really intuitive, it doesn't help you in your workflow, and it's definitely not helping you in terms of regulation. So our goal is to actually bring you from here to here. Maybe not every day on the beach, but at least you should be able to access the tool wherever you are, and it should be user-friendly and intuitive. And as Mr. Führer from Swiss Re already said, most of the money is going to be in the future with the millennials. So also they want to have such a tool to be easy to use and to be able to access this wherever they want at the end. So now let's talk about a case that we actually had 1 year ago, together with Octagon Gestion. There's a multi-billion asset manager in Geneva. They're focusing on family office services and wealth management services in Geneva. And they came up to us because they wanted to change their old IT system because it was not really helping them and had a lot of issues. So they approached us last year. And yeah, that was were the challenges they were facing. So it was actually the difficult IT system. They couldn't really use it. It was not really fitting their workflow. They spent more time uploading their data than actually helping them. Also, it was ineffective and slow. So they spent a lot of time with using the tool, but it didn't give anything back. And what we hear from a lot of asset managers and wealth managers and also banks is that most of the tools are not flexible and fast enough to cope with the latest regulations. And also there we had to help them to issue this challenge. And also the portfolio tool was more or less just not really granular, and they couldn't really help them with the day-to-day job they're doing with the clients. So what we actually did at WealthArc, we're not doing a revolution, we are doing a very fast evolution. So we want to go always step by step. So we started with the digital reporting. So our goal is always to help them displacing old IT tools, but step by step, so they have more work with us, and they can still focus on their daily job that they're doing. So first of all, with the digital reporting, we actually put our interface on top of their IT system. The next step was the portfolio analytics. So they now finally have the overview of all the portfolios across custodian banks, all the measurements, value at risk, expected shortfall from all the portfolios, down to each individual instrument at the end. Also, we added the CRM tool as the next part, so they were able to upload all their client emails automatically, and also it was really fitting their workflow, unlike the other IT tool they were using. And also in terms of compliance, which I think is one of the most important topics nowadays, we're now finally helping them to be compliant with our tool so they can focus again on their clients and less on admin and compliance part. And then the last step is then the API connection. So far we used the connection to the old IT system. We're now cutting this off and use the direct APIs to more than 35 banks we're already connected with. So the feedback we got after several months working with Wealthfark, the management told us that they increased their advisory efficiency. So the whole fee calculation and also the invoicing and reporting is fully automatically white labeled with their logo. And it's also in the client's language, so they can just send out all the reports directly and also the invoicing part, and they don't have to do any manual work there. Also enhanced loyalty because they could react faster. So when they maybe had some news in the morning about Nestle, they can just easily type in the search tool Nestle and see all the clients who are actually invested there, and they can easily call them and execute afterwards. What I especially liked was also the management information system. So they have an overview of the whole company, where their assets actually are, and also what their RMs are doing. So they have also the management and performance fee is calculated automatically for them, and they can see which RM is doing what job and if he's actually bringing enough money for the company as well at the end. And thanks to all of this, they were now actually able to have a significant growth on asset under management because they spend less time on admin, less time on regulation, and again, more time with clients to actually have meetings with them and do some trades which are bringing them more revenues. So this is now how it looks like at Octogone after the digital evolution. We have on the left side, we see Octogone and then the access to the tool. So the management has a specific access. The relationship manager have access over his portfolios. And now the next step is going to be that all the end clients also have access to their portfolio. They won't see any fees or anything, but they can see their own portfolio with all the bankable and non-bankable assets that they actually have. In the middle, we see what you already talked about. Then the APIs to the custodian banks, portfolio analytics tool, the CRM part, where you're also working now with Swisscom to be able to do all the calls that you have with your client to actually record them. So on a later stage, you can always listen to it again, what you actually talk to the client. On the right-hand side, we see the old IT system that we're cutting off now, and we're using all the connections then to the custodian banks, also there to be more efficient and to have the best data quality possible. And as you can see, as Octogone is a client of us, they're automatically also a client of our partners. So we're getting the market data from Thomson Reuters, so you don't only see the prices that the custodian is giving you, the different ones, you can also have the prices from Thomson Reuters. We have Swisscom, where we have our servers, so all the client data is actually staying in Switzerland in a tier 4 server, so the highest security you can have here in Switzerland. And then also for the pre-trade checks, we have Investment Navigator in Digita to do all the pre-trade checks for you. Also if there's enough cash on the account and so forth. And we also have partners like a cryptocurrency part, so you can easily add cryptocurrency to your tool as well. And we're always happy to onboard new partners where it makes sense for us, and especially where it makes sense for the clients at the end. So Octogone is a very happy client of us now, and we hope to get even more of those in the future as well. So maybe I'll just quickly recap on what we are actually doing. So the portfolio connections to all the different custodian banks, but then also the CRM tool. We really have a state-of-the-art tool where you can upload all the data, and you even get an alert when your client's birthday or when his passport is running out. So everything you don't have to think about this anymore. We are helping you with this fully automated. And again, the market data, Thomson Reuters. We are helping you with the risk and compliance tools. So we are having sprints, updates every 2 weeks. So we are actually able to be on top of regulations and not behind them. Also, you can easily add non-financial assets, so some clients are also adding real estate or their old-timer collection or some art if they want to see this as well. That's also very easily done. Then the management information system to have a global overview of the whole company, how much money we are actually making. And then the whole digital portal for the investor, so also the end investor can have access to Wealthfark at the end. Yeah, and so far we have clients coming from 50 million up to more than 3 billion, and we also have some high individual clients, which are already direct clients from us. And then when it comes to prices, it's I think an important point. So there we are actually doing the specific pricing based on asset under management. So we also want to be there for the smaller ones. We don't care how many transactions you have, how many APIs, or how many licenses. We just do it based on assets under management, and there's no on-top fee. So everything from IT hosting, setup costs, server costs, market data from Thomson Reuters, and the client training is fully included, and there's just one price tag. And then there are two options: a seamless integration when there's a specific IT tool was already in place, and the other case is when you're working with Excel so far, it takes about 48 hours for us to upload our system and make you ready for it. We are also uniquely giving out pilots for around 3 to 4 months. And we are doing this because all of our pilots are now actually clients from us, and we never lost a client. So I think that's a very, very good sign. And yeah, maybe once again, if you want to come from here to here, I think you know now where to call. Thank you very much.
Thank you.